Okay, now this hybrid funding model combines both of these into one, and it's just the credit stacking is this is the core strategy, right? And it just combines these two. It's all built off of this strategy though, all of this. So again, still community banks, regional lenders, season profile. Here's the ideal funding requirements. Again, I've gone over this multiple times, not only in the core guide, but also in the other videos. But this is what you want. These are the maybes, right? I've explained it multiple times, but we'll just go into the hybrid funding strategy. And if you don't know what the ideal profile is, I explain it here in the credit stacking, okay? And also in the core strategy in section 5. Anyways, so the core strategy, right? Oh, I want to show you guys this as well because a lot of people wonder like when can I get like certain things. So this is basically the flow chart. 0 to 6 months old, if you have the 680, you can get business cards. Okay, 6 to 12 months old, if you have the 680, business cards. 1 to 2 years old, 680. Then what happens is if you have the financials, no, really secured card, unsecured business cards is what you can get. Sometimes you can find the lines of credit and term loans where they do stated, but generally it's business cards. If you do have the financials, business cards, and then the lines of credit, term loans, either stated or verifiable, right? And then 2 plus years, at this point, you can do whatever you want almost. 680 plus, yes. Do you have the financials? No. Business cards, and then you can do the line of credit or term loans, right? Stated income. If you do have the financials, basically everything here, but with the financials, you get higher limits. And so, really, the main thing is the score, right? If you have a 680, you can get funding. And then at that point, it depends on the age of the business, right? New and existing businesses, basically business cards. And then generally, rule of thumb to keep it simple, I say 2 plus years. That's when you can get into the business lines of credit, the business loans. And then at that point, whether if you have financials or not, you can either go stated income or full doc lending, right? So that's kind of that's basically the flow chart, the logic behind it, right? And then here's the actual like just a quick note on the type of profile, right? Anyways, that's that. Now the core strategy, what we focus on. Credit bureau, they pull from lending thresholds for before they require financials, whether they put a UCC lien or not. Okay. And then because we're also doing the credit cards, who the underwriter is. Okay. So this is secured versus unsecured. I explained it in the previous video, but basically a secured product, they require collateral. They may put it on a very specific item. So they may say the cash, right? Or the real estate, equipment, receivables, or it could be multiple things. Basically, it gives them dibs. And in the case if there is a default, they take that first, right? Because it is secured by that. Unsecured means no collateral, right? It's just based on your FICO and they like basically they have no claim, right? Now there is an exception, a UCC1 lien. Sometimes they say it's unsecured, but they put a blanket lien, and basically it gives them first dibs on your business assets ahead of other creditors. It supersedes the personal guarantee, right? Basically, it gives them access to those and to those business assets, and they can liquidate. So basically, even if it's technically unsecured, if they put the blanket lien, it's a safety measure, right? And yeah, without it, basically they have to go to the court, right? That's why they do these liens, right? And other times they don't put a UCC1 lien. Sometimes they just don't do any of that. And then other times, like it could be like a $250,000 line of credit, and instead of requiring collateral, they may just collateralize it with the lien with this, right? So I hope that makes sense. It can kind of wonky once you start talking about the lien, secured and unsecured, right? But basically, um, that's what that is. If you do take a loan with a lien on it, you want to wait for it to save it for the last of your stack. I'm gonna give you a simple stack that you can do though. Okay, I'm just giving you guys the general knowledge because like if you have the general knowledge, then you'll be able to do it with a bunch of other products, right? This is just one specific sequence that I personally do with a lot of my clients. So Full doc lines of credit, right? Some banks require full financial documentation. It's usually when their thresholds are higher over certain amounts, right? Uh, Usually, once you start requesting more than 100, they may require full docs. Sometimes they even say over 50. It all depends on the lender, right? And then full doc locks can either be secured or unsecured. It depends on the amount, right? Anywhere from 100,000 to 150 is generally unsecured, and then over 250 they usually secure it. Okay, and also these limit thresholds is also when they start requiring docs. Once you anything over 100,000 is usually when they require. Oh yeah, that's what I said up here. Anyways, so yeah, that's how that works. So when to accept a line of credit with a lien, as I mentioned, save it for the end of your stack is usually the best. So building a hybrid credit cards or a hybrid stack. Okay, so you apply for the line of credit first, right? And this goes into how you use one hard pull for multiple products, right? Like I explained here. So you apply for the line of credit first, and you can always plan this ahead of time as well. But generally, the way you actually pull it off is once you basically make sure they can use that same hard inquiry to also apply for the business card. You want to plan it ahead of time, but the way you pull it off is once you apply for the line of credit, you just ask them like, "Hey, can you use this same hard pull for the credit card?" Right? And if that's the case, then they'll be able to do it, right? But like if it requires another hard pull, then you can decide on whether or not you want to apply for the business card. Okay. So again, this one you can kind of plan ahead, right? But generally, like to actually execute it when you apply and once the hard pull is done, that's when you ask them if they can reuse the hard pull, right? For the business card. Because even though you call ahead of time, sometimes things change. Okay. So basically confirm ahead of time, but when you're actually pulling off the sequence, just let them know like, hey, if I like, can I use this inquiry for a business card? And if they do let you, that's how you get two products with just one hard pull. Okay. The two most common setups is unsecured stated income lines of credit with business cards because it requires no collateral for all of it, no liens, no financials, right? And that's gonna usually get you about 100 to close to $300,000 in funding. Full doc unsecured lines of credit with business cards is the second option, and these come with higher approval amounts. Generally, you're looking at like more than 300,000. Like this is when you see people getting like $500,000 or more. It all depends on like how strong their tax returns are, really, right? So either all lines will be stated income, all full doc, or a mix of both, right? You can mix. Remember, you can mix and match. This is just the most common one, the common stacks. Okay, and then here's where to apply again: regional banks, credit unions. So you gather your data points, okay, and really these are the questions you want to be asking them, right? This is all you really need, but really you want to. What you want to do is you create you call them about the business cards and the lines of credit, right? To be able to get that information. And it's this is all you need. Which bureau they pull from. If you can apply to multiple products under one hard pull, will there be a UCC lien? Is it secured or unsecured? Their approval limits, right? And who their card issuer is. Okay. And though again, these are more questions, and you record this in your lender data sheet. Okay. So this is how the actual wording of it, but really it's six questions and six main things, right? And but this is how you actually ask it, how you actually ask those questions. Okay. Now, building your funding sequence. Once you verified everything, organize everything into a sequence like a spreadsheet. Then it all depends on your objective. There's no right or wrong way to stack. There's so many different stacks you can do, but basically each bank should pull a different bureau, use the same hard pull for the same for the business card, right? Each bank should provide the type of products you want. Each bank should use a different underwriter for the business cards. And then their lending thresholds, right? Ideal setup: three Experian, three TransUnion, three Equifax banks. You don't have to apply in any certain specific order, right? but this is just an example. And you want to keep the reason I say three though is because of your inquiries, right? Which you'll see later on. So this is how you actually pull off the sequencing. So very similar to the line of credit, right? Because you want to open the checking account with all the banks you plan to apply at. Even the minimum deposit is good enough. But if you have larger deposits that you can make, it does help. So like $3,000 to $10,000 or more, it helps. Not required. Once you've started a relationship, then that's when you start your applications, right? You apply with Experian banks first, for example, right? Then TransUnion and then Equifax. This is again not any sort of order. I'm just giving you an example of like how you would do it. I just always start with Experian. That's just what I do. Now, if any require a lien, save that for last in your stack and make sure to save an extra inquiry for that bank that you plan to apply at. Okay? Don't submit everything at once. Usually 3 inquiries per bureau is the sweet spot. After that, it's too many denials. One funding round can get you $100,000 to $300,000 in approvals. Okay? You only want to answer what they ask you. Okay? You don't want to give them too much info. I went over this in the line of credit training that because it's a business product, they can basically they don't have to go 100% off credit. If they feel like denying you, they can just deny you based off a hunch, which is highly illegal if they were to do that same sort of practice in personal funding because of the consumer protections, right? You want to keep a funding log as well. Now, here's an example of like a funding log that this is mine. This is just one of them, but this gives you an example. So they offer the business card, right? They underwrite with within, and there's no docs for the line of credit, right? So this is TransUnion. So I might put Valley Bank, right? Valley, and then TransUnion, and you might have this one. I would probably. It doesn't say if I can get both of the line of credit and the card with just one hard pull. So I would probably call ahead of time and ask, right? And then I might say, okay, Cinevis is next. I will do Cinevis because they do. Oh, hold on, I spelled that wrong, right? Because they do Equifax. They give me the credit card and it's no doc lending. Boom, that's one. And then I might do Experian, Wells Fargo, no doc, credit card. Okay, so Wells, Experian, and then boom, that's it. That's it. That's how simple it is. That's how simple a stack can be. You don't have to make it so complicated, right? But this is how simple it can be. And then now, what you can do is like, okay, does Valley also use one inquiry for that? And let's say, again, you would have to call and check. I don't remember all of this off the top of my head because there's so many banks. But let's just say like yes, one hard pull, right? This one's no, and then yes, one hard pull. Okay, so then I may say, okay, I'm gonna do Valley Bank, right? Okay, Citivis. Okay, I'll only get the lock because it requires a hard pull. This one I will do both. This one I will do both, right? And then boom, that's how you do it. Now we'll do another example. Let's say one of them requires a lien. We'll just do, for example, PNC, right? PNC. Okay, they do Experian, and then we'll just say no, but the line of credit requires a lien, right? This is just an example. You have to call these people. Things change all the time. So then in this example, what I would do is I'll be like, okay, I'm gonna start with Wells Fargo, and then after that, I'm gonna hit TransUnion, this Valley Bank, and then Cinevis, and now finally I'm gonna hit PNC, okay, and I'm only gonna get the line of credit, or actually, you know what? I'll get both now at this point because let's just say because like again, just because it requires another hard pull doesn't mean it's a bad idea. It just means you have to figure out how to use your inquiries, right? So then I might say, okay, PNC, you know what? Even though they require a hard pull, I'm gonna get both the line of credit and the credit card. But the reason I'm saving PNC last is because again, it requires a lien, right? And then the moment the lien is on, I cannot get more funding, right? So a more complex example, say you do here these ones, right? And then we can do Regions Bank, TransUnion, right? And then They do yes, but one hard pull. I'm gonna get both, right? So that's two TransUnions, one Equifax, one Experian, and then let's just do one more Equifax. Okay, Equifax, no. So line of credit, right? Okay. And then what I would do then is boom, apply for this. Because it requires one hard pull, I'm gonna get both. This one, all right, I'm only getting the line of credit. This one require I can do the line of credit and the card, so I'm taking both. I'm taking both on this one. This one I'm only taking the line of credit, and then same thing, right? Once you get through these main core ones, and notice how there's two TransUnion, two Equifax, right under the limit of three, right? Because again, once you're over three, so over three, auto denial, right? Once you're over three, it's an automatic denial, typically. So notice how I keep them at two. And then even though I already did one hard inquiry because I still have two more inquiries I can use on Experian, that's when I hit PNC. And then again, I saved my inquiries for it, and then it's also saved for last, right? And then if they put the lien on, it's okay because I may have just already gotten all this already. And even though they cap out my business for more funding, well, with this stack, I just probably got like $300,000, right? And again, not all these banks are probably going to be in your state, and also not all of them are probably going to offer the same programs. But that's why I taught you how to do all this, because it all changes. It's all state specific. And if I could just teach you guys how to do it on your own, well, then at that point, it doesn't matter what state you live in, right? It's kind of one of those things. Like I just taught you how to fish. So again, I hope this makes sense. If you still need further help after this, again, I offer consulting. You can always contact me and we can go over like the type of consulting I do, or I can just get you funded myself, right? I'll just do it for you. But that is really what this is, like how to do the business funding in a nutshell, right? And I really hope it was what you guys expected. You can email me at david@bizcreditkit.com if it wasn't up to par, right? Or if there's pieces that just weren't clear enough. Okay. So, really, the last thing I want to leave you guys with, I guess, is this, that the core strategy to credit stacking is right here, right? After it's the same exact pattern. It is a pattern. Credit is an algorithm, it's a pattern. That's why we're able to do this, right? Once you understand that, then you can really implement that into different products, because this credit stacking fundamental works for all of these products here, including personal cards. Really, this 0% business card stacking, if you just take away the word business, right? And just say 0% credit card funding strategy, that's how you do personal. Okay. It's the same exact thing. And again, the reason I know is because that's where I started, is on personal. I started doing personal, and then we basically just took the same strategy and applied it to business credit cards. And then we took that strategy and applied it to the line of credit. And that's how we figured everything out, right? But that's why I said, like, as you gain more experience, you can test and experiment with other credit products, and you can do way more complex stacks than the ones I just showed you. But this is going to be enough for you to get by and get what you need, and maybe even create your own stacks. Okay. So let me know what else I can do for you, and I appreciate you.